Depreciating a vehicle is a way that you can really offset your active income. Whether you own your own business or whether you have a W-2 income, we can take advantage of Section 179 and bonus depreciation. So Section 179, you can treat the cost of a property, of a specific property, as an expense. Okay, so what that means is we can take generally the full purchase price of a piece of property and expense the entire thing and not have it charged to a capital account, which means you have to take several years to take that expense. So Section 179 specifically breaks down limitations. There's certain limitations, there's reduction in limitations, and then it breaks down carryovers, how to compute taxable income, the differences between married individuals filing separately. So Section 179 breaks down all of these, breaks down vehicles that are excluded, and so forth. So again, Section 179 is what allows us to deduct property in the same year that you put the property into service. So there's Section 179 that we can take as a deduction. There's also bonus depreciation. So I'm going to show you with this little visual what that looks like. So this visual breaks down how bonus depreciation works on a vehicle to offset your W-2 income. So 100% bonus depreciation for any vehicle placed in service after January 19th, 2025. That's what the One Big Beautiful Deal provided. So how does this work? Your business purchases a qualifying vehicle. What is a qualifying vehicle? Generally, you want the GVWR to be over 6,000 pounds. Okay, there's a door sticker that has that. There should be another YouTube video that'll come out where I'll kind of break down where that info is. You want this used for business purposes. Okay. You can use it for personal use, but you definitely want to use most of it for business purposes. It's got to be placed in service after this date. It's got to be purchased and used in the same tax year, right? So you have to place it in service in that same tax year. And it must be depreciable property with a recovery period of 5 years, which is generally most vehicles. Okay. Now, you'll use 100% bonus depreciation to deduct the full cost in year one. This creates a large business expense that offsets your W-2 income through the Schedule C on your tax return. So here's an example. You purchase a Ford F-250 Crew Cab 4x4, the GVWR 7,200 pounds. That stands for the gross vehicle weight ratio. Okay, that's 7,200 pounds. It's an $80,000 vehicle. You get the $80,000 deduction. It doesn't matter if you bought it in cash or you financed it and you didn't put anything down. It doesn't matter. You get the full purchase price as a deduction that year one. So that's why you get the full 80,000. Let's say you made $200,000 in income that year. That $80,000 directly offsets that W-2 income. Your new taxable income is $120,000 at a tax rate of 25%. That's $20,000 in tax savings. Now, how do we actually structure this? Again, we create a business entity that we're going to start. We're going to track everything. We're going to set it up correctly, and we're going to be in pursuit of income. Now, with that, that's where we're going to house that vehicle is underneath that entity. Again, we can only use it, 60% of the time. Instead of taking the full $80,000 deduction, we take 60% of that, which would be about 50 grand or so, $48,000 or so, which is still more than what you would have done if you didn't do anything or didn't try and set this up. So because we can take that deduction under a separate entity, that's why it offsets your W-2 income. Okay. And here's your before and after comparison. You don't do anything, you pay 50 grand in taxes. You do something, you only pay 30 grand in taxes. Okay. So that's the benefit of utilizing a vehicle. It doesn't even have to be a vehicle that you that you need necessarily. It can be an upgrade. If you've had the same vehicle for so many years, we can go find another one that you have the same payment for, right? And now we can just take advantage of a business use for it. And again, it can save you massive amounts of money in taxes when you do it this way.